Reserve Bank's Monetary Policy Committee will be meeting this week to discuss the country's final rates decision for the year. An announcement on whether rates will be hiked or not is expected on Thursday, the 24th of December. Let's talk now to Founder, Director and Chief Economist of the Efficient Group, Dawie Roodt. Dawie, as always, thank you for joining us on eNCA. Now, it's widely expected that the SARB will continue on its aggressive interest rate hiking path. The question, though, is will it be 50 basis points, or will it be in line with what countries like the United States have done in terms of a 75 basis point increase? What are you seeing?
Yeah, good morning to you. Thank you. Well, at the moment, I think we're probably going to get a 75 basis points increase. And the reason for that is because that has become sort of the last time that the Reserve Bank increased interest rates. It was at 75 basis points. However, and I think this is important, there is a good possibility that they may decide to go for a 100 basis points increase. And it's not only because of the rest of the world increasing, but it's also because we need tighter monetary policy in South Africa. Now, of course, high interest rates or tighter monetary policy is going to be quite painful to the economy. It will affect economic growth, but it's much better to have higher interest rates for a short period of time than to have high inflation for a long period of time. That is far more damaging. But my money is certainly on 75 basis points increase. But if I was the Reserve Bank, I would have gone for the big one, a full 100 basis points increase.
Mm-hmm. Should they go for the 100 basis points increase, Dawie, does this mean we might see the hiking cycle come to an end sooner than the end of 2023, as has been indicated by other analysts and economists along the last few months?
Exactly. That's exactly the reason why I would like them to go for a 100 basis points increase. There's a saying that if you go through hell, don't crawl, get it over with. Increase interest rates, make sure that inflation and especially inflation expectations are addressed. I think after that, we're probably going to see another 50 basis points or so, but then we're probably over the worst. I think the worst, in fact, is already behind us. And in 6 months' time or 8 months' time, we could be talking about the possibility of actually cut in interest rates. So the sooner they do that, the better. Of course, right before the Christmas spending season, it can potentially have quite a significant impact on spending over the Christmas season. But yes, I agree that we're getting closer to the upper turning point of inflation, and certainly at the upper turning point of interest rates, of the interest rate cycle as well.
Yeah, and of course, Dawie, we can have all these expectations and these conversations, but in all reality, geopolitical events have created a lot of uncertainty in the world and the risks of a global recession. So when we talk about inflation and the pressures that currently exist, when do we anticipate, despite the intervention of the Reserve Bank, to start to see some kind of easing, if any?
Yeah, well, already we see some easing, in fact. We've seen the rand appreciating quite nicely the last couple of weeks, which will be good for inflation. We've seen things like, for example, the international oil price coming down a little bit, and some other commodity prices as well. And as far as I'm concerned, that's a sign that the geopolitical tension that we've experienced the last couple of months is slowly cooling down a little bit. Of course, there's always the risk that something could go wrong. The past week or so, for example, we saw some rockets being fired to Poland, apparently by accident. But that sort of things can go wrong. During wars, there are accidents, and that can, of course, then all bets will be off the table. But my sense is that things are cooling down internationally, which, of course, is an excellent thing. But having said that, I think we have to prepare for a large chunk of the world economy to enter into a recession next year, early next year. And I'm talking about the Europeans, the big economies, the Europeans and Americans. And in the case of China, for example, I expect significantly slower economic growth. No, not a contraction yet, but a slower economic growth. So yes, the geopolitical tension seems to be cooling down, but the worst in terms of economic growth is certainly not behind us yet.
Mm-hmm. Now, one thing that the governor is always asked at these press conferences after the MPC meets, Dawie, is how much of the global space played a factor in what's decided in those meetings, particularly the direction that the U.S. Federal Reserve would be taking in terms of their hiking cycle. And the governor usually plays down the influence that that decision or those decisions have. What are your thoughts in terms of that overall decision and the direction that the United States takes in informing our MPC?
Well, the Reserve Bank, the South African Central Bank, make their decisions on inflation, actual inflation, and inflation expectations. That is the only thing that they really are looking out for. And that's the only thing that they are concerned about. But the reality is all these sort of things affect one another. South Africa is part of the global financial world. If there's an increase in interest rates or a change in monetary policy in America, as an example, that will affect the exchange rate of the South African currency, the rand, which will impact on our inflation rate. So yes, although inflation is the thing that the Reserve Bank keeps an eye on all the time, rightfully so, other factors inevitably also come into play. So when Americans increase interest rates, for example, expect South Africa to move more or less in the same direction. And that goes for all countries in the world. We're all part of this global village, and the global economy moves in a cycle, and we have to go with that cycle as well. But yes, the governor is correct. We don't do what the Americans do necessarily, but since we're all swimming in the same dam, our actions will be more or less in the same direction, including monetary policy.
One of the interesting debates that are currently happening, and they've become louder over the last few weeks with public sector workers and inflation-related increases that they're looking for, is that the SARB should probably consider the interest rate hiking cycle and what South Africans or general consumers are going through, and instead of being so aggressive, perhaps taper back to allow for some movement, whether it be in the public sector, in the private sector, for companies to make provisions for workers. What do you say to that particular argument?
No, that's not a job of the Reserve Bank to create jobs. It's not a job of the Reserve Bank to grow the economy. The job of the Reserve Bank is to look after the value of our currency, the rand. And we talk about the wage increases in the case of the civil servants as an example. Civil servants, they got an increase of 3%. I know they're demanding higher increases, higher than the inflation rate, or at least the inflation rate. I disagree with that for a number of reasons. One reason is that civil servants the past 10 years have been getting above inflation most of the time, and in any event. Second reason has to do with civil servants are very, very well remunerated in South Africa in any event. If you compare it to the private sector, a good example is the private sector lost more than 1 million jobs the past 2 years. Not one single civil servant has lost his or her job the past 2 years or so. So the civil servants are in a very cushy position in South Africa, and you cannot compare it to the private sector. In fact, they are very, very well looked after. In terms of the Reserve Bank trying to stand back a little bit when it comes to interest rates because they want to support the economy, yes, but the best that the Reserve Bank can do is to tighten monetary policy as quickly as possible. Like I've said, if you go through hell, don't crawl. Do it and get it over with, because it will be good for the economy, for the whole economy over time, if we have lower inflation. Of course, there are other things that we can do to get inflation lower, but those things are politically very difficult to do. Let me give you one example. One example is that there are too many people working at Eskom. We need to fire approximately 20,000 people that are currently being paid by Eskom. Now do that in practice and see what Kusatu is going to do. That's the political difficult thing to do, and many other examples as well. So since we can't do those things, everything comes down to the Reserve Bank, and it comes down to interest rates. But there are other things that can be done. Unfortunately, politically very difficult to do.
Yeah, no, very interesting insights. In fact, the governor speaking earlier in the week, Dawie, called it a policy dilemma that the bank is facing. But we must always remember that the mandate of the bank is very specific to curbing inflation. Just final thoughts from you, Dawie. You've seen what's been happening with Eskom, and we've just spoken about the wage negotiations and the stalemate that currently looms over the country. Standard & Poor's feeling positive about South Africa's outlook, but will only give a more certain outlook after the national budget is delivered in February. What do you think these ratings agencies and other potential investors would want to hear come out of that national budget in February in terms of government remaining prudent in its spending?
Yeah, well, what they would like to hear is exactly what we are hearing at the moment. The Minister of Finance, for example, not increasing wages by more than 3%. That's a kind of what they want to hear. Of course, they want to hear other things as well. They want to see that inflation comes down. They want to see that we have a good and well-anchored fiscal and monetary policy in South Africa. Those are the kind of things that they want to hear before they will consider upgrading South Africa. But remember, South Africa is very deep into junk territory. So even if there's an upgrade, we will still be junk, just a little bit less junk. But that's a move in the right direction. So the past year or so, there was some luck because the revenue has been doing quite well. But of course, there's a good management and I must give the credit to the Minister of Finance, sticking to his guns and not increasing wages by more than 3%. And I hope that's the kind of political leadership that we need, and we need the kind of leadership that we get from the South African Central Bank as well. So we need to do more of this kind of stuff to get eventually an upgrade, and eventually things will start going better in the economy. At the moment, I'm quite concerned about economic growth for all sort of reasons. Politics is one, but we need to take these sort of steps in the right direction, but it's going to take some time before we're going to get this economy out of the hole.
No, of course, and as you say, get it a little less junk that we are in at the moment. Founder, Director and Chief Economist of the Efficient Group, Dawie Roodt, thank you very much for your time this morning. Just giving us a sense of what we are expecting to come out of the Monetary Policy Committee on Thursday when they announce the interest rate.